Hi guys, welcome to the Market Code Breakers. My name is Leon, where I break down one different asset for you every single day. Did I just butcher that intro? I think I did. Market Code Breakers, I'm Leon. I break down one different asset for you every single day, giving you the key areas and levels for you to pay attention to going into tomorrow's session. Forgive me guys, I'm very tired. Anyway, yesterday I broke down gold. Again, I got it mixed up. I broke down gold and I give you some key areas. And there's something very important that happened on gold in today's session, and it happened in Asia. And I'll break that down for you. And it would have been the trade of the day based on the logic that I'll explain to you. But yeah, and there's a few more things that I want to talk about with gold. And then I want to basically review my trading day, how my trading day is gone. I am a funded trader with Top Step. I did make $1,000 on both my funded accounts today. But I'll explain that a little bit later. And then I want to break down the ES, the S&P. I want to give you some key levels for you to pay attention to going into tomorrow's session. Now, I trade the NASDAQ. I'm a funded trader and I trade the NASDAQ. And to say the NASDAQ has been a pain in the backside. It's been horrendous. And even though I've managed to pull out profit today, still, it's been horrendous. And then when I looked at the S&P, my God, the S&P was beautiful. With the ranges, with the levels, the S&P just behaved spectacularly. So I'm going to break that down for you, give you some key areas and levels for you to pay attention to going into tomorrow's session on the S&P. Now, you know with the S&P and the NASDAQ, one follows the other. Sometimes, which I didn't pay attention to today, which I wish I did, when one isn't behaving itself in relation to these ranges, the other one might give you more accurate information. Okay, so they might give you more accurate rejections of certain places, continuations, all this type of thing that you just really wasn't getting much on the NASDAQ today, but you got it beautifully on the S&P. So let's get into it, guys. I'll break down what I said to you yesterday with gold, and I'll show you how that played out. Again, I've done that. I use the same binds as NVIDIA anyway. So this is gold, guys. This is the gold chart. And I got you yesterday to mark off these ranges. This orange range, this blue range, and this further down blue range. And we talked about these ranges, expecting them potentially to play these ranges, and if they reject them and whatnot. And it looks very unclear with these ranges compared to what type of price action you got. But something very important happened in the Asia session. And if you notice, at the end of New York, the close of New York yesterday, they climbed back up, and they rejected going into this orange range. They were saying that we don't want this orange range. And then in the Asia session reacted from the lows of this blue range, and then they targeted the lows of this orange range, but they too rejected it. So they was what's the word? They was cooperating with New York. They was agreeing with New York that they too didn't want to play that orange range. That was the best signal of the day when it came to these ranges on gold, because that told you that neither New York or Asia want to play in that orange range. Price can only go down from there. So if you'd have taken that short, once it broke free of this, I talked about this gap getting filled when price breaks below it. That's exactly what happened. And it worked its way down into this blue range. It completely cleared that. Now, you would have been good to hold that trade basically until the open of London, like till well into the London session, but you wasn't to know that. But still, based on the ranges, based on how they operate, you would have seen that both New York and Asia both rejected that orange range above, and then they moved price lower. So it would have been a fantastic short opportunity. Now, I do teach guys these ranges in my Discord, and when price gets to a region like this that we have on gold, where you can't really make sense of it because you don't have any levels, any ranges to work from, then it's simply a case that you have missing information on your charts. Now, I'll just quickly show you what I mean by that. If I show you now my NASDAQ charts, I put it on the 15-minute time frame. Now, this is going to probably blow your mind, but look at this. This is what I work with on the NASDAQ. These are all the levels and all the ranges that play important roles. Okay, it looks very complicated, but once you get used to it, we're okay right now. We're in a region where there's not that many ranges because it's new price discovery areas. So new ranges are being set all the time. But right now, there's not that much that's going to impact price. Whereas when you start to get into this region and you've got so many different ranges where price can react from and different things can happen, if price is doing something that you're not expecting, it's because you've got missing information. But that's just basically what I wanted to say about gold and how in this region it looks like, well, there's no levels down here, Leon. So what are you talking about? Because there's missing information. There is ranges in this region. In fact, there's plenty of ranges in this region. So that's what's going on in this region. It's playing those other ranges, but I didn't give those to you because I didn't really think they might be necessary. I thought this one might get played a little bit more than it did. I mean, it did get played. You still got some fantastic opportunities just in this blue range alone. Let's have a look at this. So you would have got a nice short opportunity from the midpoint that broke down before the London session. Again, when price broke into it, it went to the midpoint, went back to the lows. You would have been good in this region to target the highs, and that would have played out. That would have been a fantastic trade on gold for you. And then, if you want to see if it's had the legs to move up, you'd wait for some sort of stallage, which would be this region. You'd end up taking your profits up here. So there was opportunities. Apart from just the one in Asia, there still was opportunities based on the levels that I gave you yesterday. So that's what happened on gold. Nasdaq was just a tricky, trappy son of a gun. I started to play it in the last couple of hours of the market, which was in this region. And I said I made $2,000. I made $1,000 on each account. On what I decided I was going to take a payout from one account, and I was going to take $500 from one account, and I was going to leave the other one to try and build up a little bit more profit, so that when I took the money out, I still had more to work with. So I carried on trading one of my accounts towards the end of the market, and I actually give back about $450, which kind of sucks, but that's the game, That's the game that we play. So you can't win them all. I'm still up for the day. I'm still up nearly $500 on that account. So it's been a very good day for me trading. But it's been very tricky. The Nasdaq wasn't behaving in Asia. I actually started the day in Asia, and I actually gave away $500 profit on both of my accounts. And then when the London session came, I managed to make that $500 back plus 900 and something dollars. I'll show you. $926 I'm in profit for the day. I was in profit on both accounts. Now, like I said, I give $450 back. But that's how my trading day went. So I've now qualified for payout. I've now had the 5 days worth of profit. As you can see, last Friday I had a terrible day. Very disappointed in myself for the way I let Friday run away from me, but we made it back this week, so all is not lost. Things are still going well in that respect. So yeah, the Nasdaq opportunities. Was there some? There was. The best opportunity really in relation to these ranges for the Nasdaq and the information that I gave to you yesterday was when we broke into this purple range, this blue range below, and we came back above it and we retraced to the highs of it. And that really was the best clear opportunity. I mean, you can say rejections of this green range, potentially rejections. I mean, okay, let's start again on the Nasdaq. Right, I will explain to you what we see in here. So we cleared this purple range to begin with, as you can see. We reacted from the highs of this green range. We reacted from the midpoint of this green range, this much bigger green range. Reacted from the midpoint of this much bigger orange range. Reacted from the lows. So throughout the start of the New York session, all signs based on this, it kept breaking below these markers, retracing to them, continuing lower, retracing to them, continuing lower, retracing to them, continuing lower. So as you can see, for the first half of the session, everything was screaming shorts. Everything was screaming shorts. When they're making a move in a particular direction and they're making a sort of trending in a particular direction, this is the type of thing that you'll see. You'll see retraces from the underside, continuation lower, retrace to the underside, continuation lower, retrace, continue lower, retrace, continue lower, retrace, continue lower. So there was plenty of opportunities based on the levels that I give you. But for me, it was just very trappy and tricky because I started to play in this region when all the movement was gone. I missed a lot of it, and I wanted to try and see if I could build up a little bit more profit on one of those accounts, and I managed to give back a lot. So I'm a little bit disappointed, but like I say, that's a game that we play into. So the S&P looks a lot more readable. So this red range, we broke into this blue range, we cleared it, we retraced to it, we started to play the underside of this blue range, we broke free from that, we reacted from the midpoint of this green range to the high, and then back down to the midpoint, back to the high of this orange range, back to the midpoint, back to the high of this orange range. Then we cleared this orange range, we cleared the green range. The best reaction that we got on the S&P for the best long was when they said, we don't want to play this orange range. So they reacted precisely from the top of this orange range. So, oops. Oh, where's it gone? So yeah, I want to give you these ranges for the S&P. And I want to tell you, excuse me, what I expect to see in the Asia session and going forward into tomorrow's day session on the S&P. So what I see on the Nasdaq, and this is in this also follows on from for the S&P because we're sort of seeing a similar sort of thing on the S&P, but I'll explain it on the Nasdaq. We're seeing them they reacted from the midpoint of this green range. This is a much bigger green range that dates back, right? And there's this much bigger green range, and Asia reacted from the highs of this green range, the midpoint of this green range, sorry. And then New York did the same thing. And now they are actually inside of this green range. If they break below this green range again, then you've already had New York and you've had Asia and you've even had London, because London did the exact same thing. You've got all three sessions now who have rejected the midpoint of this green range. This could be a sign of things to come, because if price breaks below, we broke into this purple range, but we didn't confirm that we wanted it because we didn't react from the midpoint. If we reacted from the midpoint back up to the highs, that's confirming that they're playing that purple range. But we broke into it, but we didn't confirm that we wanted to play it. That could be a sign that purple range is coming into play tomorrow. Could be very important. And if price is to break down into this region, what you'd want to see, how we saw on gold, how they rejected the orange range above, you'd want to see them start to reject these ranges below. Once you start to see rejections of ranges below, those are potential swing trade opportunities. Why? Because they've shown that they've got unfinished business to the upside. In the same way how the week before I was calling out potential swing trade opportunities, we're seeing the same thing. The difficulty is you don't know how far down they're going to go before they go up. And they might not even go down. They might just want to complete that range tomorrow, and then they might start making their way down. We don't know how it's going to play out. But if price starts to move away, then you're expecting that they've got unfinished business, that they've all in agreement that they've got unfinished business. And the reason why you know that London has confirmed that this green range, they reacted from the highs. You could say that they was just basically playing this orange range, but then when they broke free from the green range, they broke back into it. You've got a few wick touches here, they broke back into it and they retraced it. That's confirming from London that they do want this green range. Okay, they have confirmed that, but you know, London, New York said no, we want to build up long, so they're all in agreement now that I think price is going to come down before it goes up. So that could be what we get on the cards tomorrow, potential loading up of longs in this region, maybe down in these ranges, and then price goes up. So that's something to pay attention to when it comes to the S&P as well. Now, the S&P have rejected this orange range. This could be key again. If price is to break down and we get a further rejection of that orange range, another rejection of that orange range, or maybe they haven't broken into it suggesting that they want to play it. You might get another reaction at this point, at which point then it might be a good opportunity to run some longs. But it all depends on how price transcribes throughout the day session. So the ranges that I want you to take forward for tomorrow's session, where I'm expecting you to get some reactions from, we'll start at the highs here. We'll start with this blue range. The highs of this blue range are at 6031.75. The lows of this blue range are 6023.25. And like I show you in every video, you do it with the Fibonacci tool. So you put your Fibonacci at the highs and then at the lows that I just called to you. And then you want extend lines right. You want them 0, 0.5 and 1 highlighted. And then you want, the background. And you want to make the ranges that I give you want to make them different colors. So you can clearly see which ranges they're playing, which ones they're rejecting, what they're doing. The next range that I want you to mark off is 6036.50. 6025.50, and then that's the highs to the lows, and make that one a red range if you want to copy me. If you want them to be a different color, you do you. And then I don't know which one is the right one or which one is the wrong. I think this is the one I've just put on, isn't it? And then the next range is this much bigger green range, which they played it, they cleared it, they come back up and then they rejected the highs of this orange range. So you can see the importance of these ranges, because when they're refusing to play in one, they make it clear. When they want to play one, they also make it clear. However, sometimes when you're trying to watch it live, it can get a little bit confusing. But still, it's better to have in your mind what they are intending to do based on these ranges, because this is how they're manipulating price. They're working to one range to the other, and they're communicating to one another what their intentions are. And it's my job to decode those intentions and bring them to you so you can be informed and make better trading decisions. So the next the bigger green range is 6015.50 to the lows of 5997.25. I'll give you this orange range as well, and that's 6010.00, and then it's 6002.25 as the lows. And then just so you've got the same information that I have on my charts, I'm going to give you this orange range down at the bottom, and that's 5986.75 to 5971.25. If any of you guys are new watching this video, when you're unsure of what I'm talking about with these ranges, go back and watch some of my old videos, like my older videos from last week, from this week, where every single day I've broken down what I've said to you the day before, and I've shown you the trade opportunities that you could have taken based on the information I gave to you, like I'm giving to you now on the S&P. Every single day I break down what trades you could have taken based on the information that I give to you yesterday. So go back and watch some of those videos. There's a lot of vital information that you will learn in those videos on what type of things you're to expect. But yeah, that's everything for this video, guys. Please like and subscribe if you've learned something, or if you think that you're gonna find use out of these ranges. These are the best. This is the best way to analyze price action, because this really tells you the story of what the big boys are trying to do, what they are trying to achieve. As you can see here, just on the S&P. So we reacted from the midpoint of this blue range, broke to the lows, moved back up. We rejected the lows of this red range. We broke down. So this is them just manipulating price, saying, okay, we're going to leave this blue range incomplete, but now we don't want to play that red range. We're done with that red range. Price is going to go lower. It's that type of thing that you start to see. Sometimes it gets unclear. Like today, it was a little bit unclear for me on the Nasdaq at times, but on the S&P, this looks so beautifully clear. I wish I'd have traded the S&P today, but I never did. So yeah, that's it for this video, guys. If you've liked it, please like and subscribe to the channel. Share these videos with your friends. Everybody can learn from these. Like I say, this is the best way to read the markets, because this is what the big boys, the big institutions, the banks, these are the ranges and the levels that they use, and this is how they're communicating price. So yeah, thanks for watching, guys. I will see you in the next video. Bye for now.